Okay, good afternoon, students. Hope everybody is doing good. Yes, yesterday we discussed about calls in advance, calls in arrears. Then we tried to solve one problem, including calls in advance, calls in arrears, rejections, excess money kept with us. Correct? And I gave one homework, that is illustration number 4. Here it was calls in arrears, not calls in advance. So I hope you have tried to solve it. Anyhow, we'll quickly solve it so that we can go forward with the chapter. Okay, illustration number 4. Illustration number 4, right? So how many shares we are planning to issue? Rupees 10 each, correct? Now this 10 is divided like how? On application it is 3, allotment it is 2, then on first call 2, second call 3. Okay. Now applications were received on 15th January 2025. So application was received when? 15th Jan 2025. Okay. For how many we have received application for? For 1.2 lakhs. Okay. Allotment was made on 1st February. 1st February. Okay. First call when appa? When was the first call made? See the question. There is a bracket. Payable after 2 months from the date of allotment. 2 months means February, March. So it will be payable on 1st April 25. And what about final call? It is payable after 1 month from date of first call. So that will be May 25. Clear? Okay. Now, applications for 50,000 shares were allotted in full. So in this 1.2 lakh, 50,000 allotted fully. 50,000 allotted fully. Next, those for 60,000 were allotted 50,000 shares. So for 60,000 allotted only 50,000. Here full 50,000. Correct? Next. And applications for 10,000 shares were rejected. Rejected. So this total is equal to 1 lakh. Is equal to 1 lakh. Correct? Next, they have given information. Balance amount due on allotment was received on 15th February. So this allotment money was received on 15th February 2025. Then the calls were duly made on 1st March 2025. So here the call was made on on 1st March 25, and here the call was made on 1st April 25. Sir, but here you told me it was due on 1st April, sir, but you are telling call was made on 1st March. See, when they make the call, it is not that immediately you have to pay the money. The information has to reach to the shareholders, the members, then the member have to go through the information, and then they will make arrangements for the payment. So the call was made on 1st March, but it will be paid. It needs to be paid before 1st April. There will be time for making the payment. Okay. So here, if I want, I can write it. Due date of payment. This is also due date of payment. Sir, from where did you get this information? In the question itself, they are given in the bracket on first call, rupees 2 rupees, bracket payable after 2 months from the date of allotment. Clear? So this was the call. They called on this date. Okay. Now, next they are giving further information. What is that information? One shareholder did not pay first call. Did not pay first call. Did not pay first call. Okay. Then he paid it along with the final call. This whatever money was due, he paid it along with first call was paid. How many shares he were having? He was having 3,000 shares. Okay. Next. Another shareholder holding 2,000 shares did not pay the final call. 2,000 shares did not pay final call till he did not pay at all till 31st December 25. That means we are closing the books on 31st December 25. How much is the interest? Interest to be charged is 10%. Right? Yeah. So they have asked you to show the journal entries. Okay. First, let's look only the perspective of leave apart interest. Let's only look the perspective of allocation of shares, that is allotment of shares. Then what is the excess money which we are having? Only that will calculate. Okay. Let's prepare the table. Shares applied. First category is 50,000. Shares allotted 50,000. Second category, share applied 60,000, allotted 50,000. Last category, shares allotted 0. Clear? Application money received. What is the application money? 3 rupees. So here we have received 1.5 lakhs. Here we have received, don't take 50,000 into 3. It is 60,000 into 3. That is 1.8 lakhs. Here we have received 30,000. Clear? Now, next one is application money due. How much is actually due? How much is actually due? Here 1.5 lakh is due. Here 1. Sorry, here the due is not 1.8 lakh. Here the due is 50,000 into 3. That is 1.5 lakh. See, we have allotted only 550,000. No. So whatever is allotted, only that much is due. Here nothing is due. Correct? So how much should be the refund? The refund, nothing here. Here the refund should be 30,000, but we will not refund it. Why? Because we will adjust it against further call. Here the refund is 30,000. Here the refund is 30,000. Clear? Yes? Okay. So balance application money. Balance application money. Here nothing. Here 30,000. Here nothing. Clear? Okay. on allotment. What is the money due on allotment? The money due on allotment here 50,000 shares into 2 rupees, that is 1 lakh. Here 50,000 shares into 2 rupees, 1 lakh. Here nothing. Here nothing. How much is the allotment money that needs to be received in the bank? Here 1 lakh. Here not 1 lakh because we already have 30,000. Correct or no? So you put a star mark here. I put a star mark here. So what is the balance remaining? 1 lakh minus 30,000. $70,000. Here nothing. Okay. Total this 1.7 lakh needs to be received in the bank. Okay. Next, any balance application money? Any balance application money? Balance application money? Nothing. So calls in advance will not be there. No calls in advance. You can write here only one more thing just for you to get more clarity. Balance application money to be transferred to calls in advance. Nothing. Why? Sir, we have excess only 30,000 that is adjusted against allotment. So there is nothing balance application money which we need to transfer to calls in advance. Okay. Next, first call. First call. Here, how much? 50,000 into 2 rupees. Again, 1 lakh. Here, 50,000 into 2, 1 lakh. Here, nothing. Money to be received in bank. How much? 1 lakh, 1 lakh. Here, nothing. Money actually received in bank. Money actually received in bank. How much? 1 lakh. Here, don't directly write 1 lakh. Why, sir? Why we should not directly write 1 lakh? Because out of 50,000 shares, 3,000 shareholder did not pay the first call. He did not pay the first call. So that will be 47,000 shares into 2 rupees each. So that will be how much? 47 into 2, 94,000. So this is the amount which we have received in our bank. Okay. Next is second call due. Second call due. How much? 3 rupees. So 50,000 into 3, 1.5 lakhs. Next, 50,000 into 3, 1.5 lakhs. Total 3 lakhs. Money to be received in bank. How much you have to receive? 1.5 lakhs, 1.5 lakhs. But actual money received in bank. See, in exam, you don't have to write this column separately, this column and this column. I am writing it here for you to understand it. For you to understand it. This column is not required. See, if you look carefully, whatever is due, that is only money has to be received. Clear? Whatever is due, that only has the money to be received. But here I am writing it separately because for you to understand exactly how much is actually to be received in the bank, how much is actually received in the bank. Clear? Here, let's say we have received 1.5 lakhs. Okay? Okay, sir. Here, out of 50,000 shares, 2,000 shares did not pay the final call. 2,000 shares did not pay the final call. Correct? If you read the paragraph. Sir, what about the 3,000 shares, sir? They have paid the final call. In fact, along with the final call, they have paid even the first call. Even the first call. Along with the final call, they have even paid the first call. So, how many shares we have not received the money in the bank? For 2,000 shares, we have not received the money in the bank. How much is that? 2 rupees. So, that will be, no, not 2, 3. Sorry. Calculate it, please. 48,000 into 3. 48,000 into 3. 1.44 lakhs plus, understand, they have this 3,000 shares on whom 2 rupees was receivable. That is the call. First call was receivable on this 3,000 shares. No, that is 3,000 into 2, 6,000. Correct? That, see here 1 lakh minus 94,000, 6,000 was receivable. Correct? That is also received. Received where? Received in the final call. So what is the total we have received? 1.5 lakhs. 1.5 lakh. Okay. Total the money we have received is 3 lakh. Balance receivable is how much? Balance receivable is how much? Balance receivable here nothing. Here 1.5 lakhs minus 1.5 lakh madbedi. Why? Because this is earlier money due. This is not final call due. We are calculating balance receivable of final call. We are calculating balance receivable of final call. This was earlier money due. So 1.5 lakh minus 1.44 lakhs. So balance receivable is 6,000. So this is our calls in arrears. Calls in arrears. Clear? If you want, you can add one more column here just for you to understand. This is also this will also come in calls in arrears. See, this calls in arrears only. This calls in arrears only is paid here. Okay. So earlier call was paid, but in the current on this 2,000 shares it has to be paid. Correct or no? We have not received money. 2,000 into 3. Clear? Okay. So we calculated everything in the table. Now let's pass the journal entries quickly. On application, what is the entry you pass? equity share application account debit to sorry, my mistake. Bank account debit to equity share application account. Sir, I am writing equity in shortcut, but in your exam, please don't write the shortcut. Okay. How much is the total money we have received? 1.5 lakh plus 1.8 lakh plus 30,000. Total we have received is 3.6 lakh. 3.6 lakh. Clear? How much? 3.6 lakhs. Next. Allotment happens. What is the entry? Equity share allotment account debit to equity share capital account. How much? Allotment money, how much was due? 2 lakhs. Correct? 2 lakhs. Now, this allotment money, before we receive it in the bank, we'll pass this also to share capital. Correct or no? What is the entry? Equity share application account debit. How much? Don't pass 3.6 lakh, because what is the application money actually due? Application money actually due is only 3 lakh. So only 3 lakh will pass it to share capital. Remaining a little portion will be refunded, a little portion will be kept as calls in advance, or will be adjusted against allotment money to share capital. 3 lakhs. Correct? Yes, sir. Okay. Next, we are having balance in this. Correct or no? We are having the balance in this 3 lakh, 3 lakh. 3.6 lakh minus 3 lakh is 60,000. Out of that 60,000, 30,000 we are refunding it. Correct? First, let's refund it. What is the entry? Refund entry. Refund of application money. Share application account debit to share application upon debit to bank account. How much we are refunding? 30,000. How much we are refunding? 30,000. Clear? Next, adjusting share application money towards share allotment. Towards share allotment. What is the entry? What is the entry? Equity share application account debit 30,000 to equity share allotment account 30,000. Okay. Now, how much was receivable on equity share allotment? 2 lakhs. How much is adjusted? 30,000 is adjusted. Correct? So what is remaining? 1.7 lakh. That we will receive in the bank account. Bank account debit to equity share allotment. 1.7 lakhs. 1.7 lakh. Here. This one. Allotment money received in the bank. To be received in the bank. Clear? Okay. So any calls in advance left with us? No calls in advance left with us. Why? Because There was a calls in advance balance application money which was already adjusted against allotment. Correct? Which was adjusted against allotment. So we don't have any balance left with us. Clear? Okay. Next. First call. First call. When was the first call made? When was the first call made? On 1st March, correct? Equity first call account debit to equity share capital. How much? You have calculated no already? First call due. Money to be received in the bank? 2 lakhs, correct? So 2 lakhs, 2 lakhs. Okay. Now when is the money due? The money is actually due on 1st April. Due on 1st April. Correct? That time we'll receive the money in our bank account. Bank account debit to equity first call account. How much we have received, Appa? First call due was 2 lakhs. Money actually received in the bank is 1.94 lakhs. Balance what happens, sir? Balance will get transferred to calls in arrears. That means we are still going to receive the money. We need a receivable, correct or no? So on 1st April 2025, it will be transferred to calls in arrears account debit to equity first call account 6,000. Sir, why? How did you calculate 6,000? First of all, we have already calculated in the table. But here, look here. How much was the earlier debit in first call account? 2 lakhs. How much was credited? 1.94 lakhs. So remaining 6,000, that is also getting credited and getting closed. So first call account is completely getting closed. Clear? Okay. Next. Final call. Final call. When was the final call made up? 1st April. What is the entry? When you make the call, it will be equity final call account debit. Equity final call account debit. Equity final call account debit to equity share capital. How much? Here we already calculated. Second call due 3 lakhs, correct? Okay. Out of this, how much is actually received in the bank account? How much is actually received in the bank account? When was the payment due? Payment was due on May, correct? Bank account debit to equity final call account. How much did we receive? 1,44,000. Or can I write like this? I have received total. How much we have received? Here, go back. Actual money received is how much? 3 lakhs, correct? 3 lakhs, not 1.5 lakhs, 3 lakhs. 3 lakhs. Okay. In that, how much is towards final call? How much is towards final call? 2.94 lakhs. Sir, balance will go to calls in arrears. Sir, what is this, sir? I didn't understand. See, understand how much money we have actually received in the bank. We received 3 lakhs, correct? Yes, sir. After second call was made, how much money was totally received? We received 3 lakhs. But out of that 3 lakhs, out of this 3 lakhs, 6,000 belongs to first call and remaining 2.94 lakhs belongs to second call. Correct or no? Sir, why only 2.945? Because another 6,000 is still payable. On what share, sir? On those 2,000 shares which are outstanding till 31st December. Understanding? Yes. So out of this 3 lakhs, 6,000 belongs to first call, 2.94 lakhs belongs to second call. So only that much is extended. Okay, not to confuse, I'll write it as final call only. But second call ಎಲ್ಲಿಂದ ಬಂತು ಸರ್ ಅಂತ ಕೇಳ್ತೀರಾ, ಕರೆಕ್ಟಾ? Final call. Okay. So 2.94 lakh will be adjusted against final call, and the remaining will be adjusted against calls in arrears. This is nothing but first call money received now. First call money received along with final call on 3,000 shares. Okay. Clear? Okay, sir. But observe here carefully. How much was the due on final call? The due on final call was 3 lakhs. Sorry. The due on final call was 3 lakhs. But how much did we actually receive? We received only 2.94 lakhs. That means 6,000 is still balance remaining in final call. That needs to be transferred. Transferred to where, sir? Transferred to calls in arrears. Calls in arrears account debit to equity final column. 6,000, 6,000. This remains unpaid till 31st December 25, till we close the books. Okay. Yes, all the entries are done. Okay. Now interest will come. Interest will come. Interest on what, sir? Interest here. Here interest will come, and here also interest will come. See here, this interest will come from 1st April 2025 till 1st May 2025. Why, sir? See, the call was made on 1st March, but when was the due date of payment? The due date of payment was on 1st April. So interest will be calculated from the due date of payment till the payment is actually made. So when was the due? On 1st April. When was actual payment done? On 1st May. So there is a delay of 1 month. So interest has to be computed for this delay. Yes. We'll split this into two. On 3,000 shares, on 2,000 shares. First call was not paid on due date. That is, it was not paid on 1st April 25. So here we write due date of payment was 1st April 25. Actual payment date 1st May 2025. Here final call not paid on due date. Due date is what? Due date is 1st May 25. Have they paid it? Paid date not applicable. Correct? Paid date not applicable because they have not made the payment. So here interest will be applicable from interest applicable from 1st April to 1st May. That is 1 month. Interest is equal to 6,000 rupees was the amount which was due. Correct or no? into how much? 10% into 1 by 12. Please calculate it. 6,000 into 10% divided by 50. 50. Okay. So this much interest is due, which we need to collect from this particular shareholder. So what is the entry? The entry is sundry member account debit 50 to interest on calls in arrears 50. When will we pass this entry? We'll pass this entry on 1st May only. We'll pass this entry on 1st May only. And on 1st May itself, we'll get the money. Correct or no? Bank account debit 50 to sundry members account 50. Or instead of passing two entries, you can pass it into one single entry. What is the single entry? Bank account debit. Sir, we can pass here single entry because the date of interest credit, I mean the date the interest is got applicable or collectible was on 1st May. Clear? And the date we received the interest was also on 1st May. That is why we can pass single entry. Otherwise, you have to pass double entry. Okay? Next here. How many months appa? See, due date was 1st May. Not paid till 31st December 25. So interest will be from 1st May to 31st December. That is May, June, July, August, September, October, November, December. Total 8 months. So interest calculation 6,000 into 10% into 8 by 12. That should be 400. Okay. Journal entry. When will we pass the journal entry? This journal entry will be passed on 31st December. Why? Because we have not yet received the payment. So here we cannot debit bank directly. We cannot pass this journal entry. We cannot pass this journal entry. Why? Because we have not yet received the money. We have not yet received the money. So that is why what is the entry will pass? The entry will pass is this one. This entry. Sundry members account debit 400 to calls in, sorry, not calls in, sorry, this, to interest on calls in arrears 400. Now this interest on call arrears and this interest on calls in arrears has to be transferred to P&L account, correct? So P&L account, interest on calls in arrears is a credit income, so it has been created earlier. To make it zero, what we have to do? We'll debit it. So interest on calls in arrears account debit to P&L account. How much? 400 plus 50. 450. That's it, Appa. Done. We are done. They have asked you to prepare a cash book. That is your homework. Please note down this. Please copy it down. Please take a screenshot, whatever is suitable for you. Quickly. Done? Okay. Done? Next, we'll take the table, screenshot of the table. Take this first set of screenshot. Next screenshot. Next screenshot. Next screenshot. Now we'll take the screenshot of the journal entries. Okay. Take this. Take this. Okay. Then the last. Done? Okay. So that completes your illustration number 4. Next, we are seeing issue of shares for other than cash. I told you shares can be issued in the beginning only. We have discussed it can be issued for cash or it can be issued for vendors, suppliers, or your promoters for free. So the journal entries will be, what are the journal entries? Sundry assets account debit to vendors account. This is when we actually purchase an item, correct? Sundry assets account debit to vendors. Say for example, I purchase plant and machinery for 10 lakhs from Mr. ABC. Okay. When I purchase, what is the entry I'll make? Plant and machinery account debit 10 lakhs. Don't tell purchase account debit. This is the nth time I am telling you purchase account will not be debited, because purchase account will be debited only with the trading goods. Here we are only discussing about assets. When asset is going to be purchased, asset account will only be debited. So plant and machinery account debit 10 lakhs to Mr. ABC 10 lakh. This is the entry. They are showing it here. Clear? Next. When you make the payment to these vendors, what is the entry you will pass? Mr. ABC account debit 10 lakhs. Usually it would be to bank account. Correct? But here we are not paying through bank. We are not paying through cash. So what we will do? We'll pass it as to equity share capital. Why equity share capital, sir? Instead of paying him, I am giving him equity share capital. Instead of paying him, I am giving him equity share capital. So vendors account debit to equity share capital. Clear? Okay. Next, when fully paid up shares are issued to vendors at a premium. Okay. Here, this point, I'll give you a small example. Then you will be able to understand. See, let's take the same example. Purchased plant and machinery for 10 lakhs from A, B, C. Correct? What is the entry you pass? Sir, plant and machinery account debit to Mr. ABC 10 lakhs. Correct? Instead of making the payment in cash, what I do is I issue equity shares to Mr. ABC. Face value of shares is equal to 100, but issued at say 120. Now what will happen? Is simple, sir. Journal entry will remain the same. Correct? Bank account in the hogtilla. Correct? But understand one thing. Now let's take two examples here. Say here we'll take issued at par. Here we'll take issued at premium. That is 120, 100. Now what happens? For 10 lakh rupees you have to pay. You have to pay how much? Payable is equal to 10 lakhs. So how many number of shares you have to issue? See here, number of shares to be issued. How much? Sir, I have to pay 10 lakh and each share costs me 100. Each share value is 100. Correct? So that will be how many shares? 10,000 shares. Correct? Here, payable is how much? 10 lakhs. So number of shares to be issued. Sir, 10 lakhs divided by, we don't use divide it by 100. We divide it by 120. Why 120, sir? Because that is your issue price. This is my issue price. Understanding? So 120 is my issue price. So how much it will be? We'll issue 8,334 shares. We'll issue 8,334. Can you see the difference? Here, how many shares did we give? We gave 10,000 shares. Here, we are giving only 8,334 shares. Sir, will vendor accept it? Yes, we'll convince the vendor. We'll say that, see, our shares are very valued. The value of the share is actually 120 rupees. So I will issue at 120. If he accepts, I will issue it at premium. But understand one thing. How much is payable? 10 lakhs only. I didn't make any changes in the payable amount. Payable amount is 10 lakh, both the side. What changed? The denominator changed. Clear? So here, what is the journal entry I will pass? Mr. ABC account debit to equity share capital 10 lakhs, 10 lakhs. Clear? Here, what is the journal entry I will pass? Here, the journal entry I will pass is Mr. ABC account debit 10 lakhs, no changes, correct? To equity share capital, how much? Always remember, even in the earlier case, I have told you, only nominal value will go to equity share capital. Only nominal value will go to equity share capital. Anything extra over nominal value will always go to share premium or security premium. Correct or no? So, how many shares we are issuing? 8,334 into 100 rupees each. So, nominal value only will go to equity share capital. Only nominal value will go to equity share capital. Anything above nominal value will go to share premium. So, how many shares we are issuing? 8,334. What is the nominal value? 100. So, that will be 8,33400. Sir, what about the remaining? The remaining is your equity share premium. Equity share premium. That will be 8,334 into 20. Into 20. So it will be 1,66,600. 1,66,600. Clear? Yes. So what changed? Debit same. Debit remains same. 10 lakhs. And ABC. Here also debit remains same. 10 lakhs. Share capital here, entire 10 lakh went to share capital. Here it got split between equity share capital and security premium. Understanding? Yes. Even when we issue the cash for premium, that is how we pass, no? Same way. Only thing is, here the denominator is different. Here the denominator is different. Here the denominator is different. Oh, sorry. It's not visible only. Both side denominator is different. Clear? Okay. Please copy it down, note it down, screenshot, whatever it is suitable for you. Okay, done. Illustration number 5. Illustration number 5. Rocket Limited purchased the business of Comet Limited for 2,70,000 payable in fully paid up shares. Rocket Limited allotted equity shares of 10 each fully paid up in satisfaction of the claim by Comet Limited. Show the necessary journal entries. So what they are telling is Rocket Limited purchased the business of Comet Limited, and for how much? For 2,70,000. For how much? For 2,70,000. See, purchase the business means what? Here we will have assets that we usually purchase. We will have the assets that we usually purchase. So when you purchase the asset, what is the entry? Sundry assets debit to Comet Limited. 2,70,000 worth of assets we have purchased from Comet Limited. ಸುಮ್ಮನೆ ಯಾರು ಬಿಸ್ನೆಸ್ ಪರ್ಚೇಸ್ ಮಾಡಲ್ಲಪ್ಪ, ಸುಮ್ಮನೆ ದುಡ್ಡು ಕೊಡಲ್ಲ ಯಾರಿಗೂ. ನಾನು ದುಡ್ಡು ಕೊಡ್ತಿದ್ದೀನಿ ಅಂದ್ರೆ I would have purchased their assets. Along with that, sometimes there might be liability also. Okay, but your assets will be higher than your liability. Whatever is the net amount, assets minus liability, whatever is the net amount, only that much I usually give. If I am giving anything extra over that, it is usually for goodwill. Okay, otherwise I will usually give whatever is the net assets you are having. Net assets means what? Net assets means what? Net assets is nothing but net worth. What is net worth? Assets minus liabilities. Clear? So I'll be paying money for that. If I am valuing some business, I'll be valuing based on this. Clear? In theoretical at least. So what is the entry? Sundry assets account debit to Comet Limited, 2,70,000, 2,70,000. Now, if the shares are issued at par, so you are issuing the shares at par. So how many shares you will be issuing? 2,70,000 divided by 10 rupees each. That will be 27,000 shares. So what is the entry you will pass? Comet account debit. Why? Because we are paying. But instead of paying it through bank, we will be passing it through equity share capital 2,70,000. Here, how many number of shares? 27,000. Suppose we are issuing the shares at premium, then what will happen? 2,70,000 divided by 12. 2,70,000 divided by 12. 2,70,000 divided by, that will be 22,500 shares. So Comet Limited 2,70,000 into 22,500 shares are issued. So what is the nominal value? 2,25,000. That will go to share capital. Balance will go to premium. Balance will go to premium. Balance will go to premium. Clear? Yes? Okay. They have prepared the working note also. You can refer that. Next, issue of shares to promoters. A company may allot fully paid up shares to promoter or any other party for service rendered by them by way of furnishing technical information, engineering services, plant, layout, drawing and designing without the payment. See what happens. Sometimes promoter might be a professional who might be helping the company in giving some service. That means what? Say for example, a company is into engineering services and the promoter means he is also one of the owner of the company, correct? He is also one of the whole member who has been fundamental or instrumental in forming the company, correct? So now suppose I am an engineer and I have a company. Now what I do is I give services to my own company. I am the owner of that company also. I am one of the owner of the company. I am not whole owner. I am one of the owner of the company, but I am giving services to the company, correct? Now company, instead of paying me the money, it will issue equity shares. One at the same, appa. If the company has not taken service from me and taken from outside vendor, then while paying to outside vendors, you don't pay via bank, rather you allot the equity share capital. What entries you pass? Same entries you will pass for me. ನನ್ನನ್ನ ಬಿಟ್ಟು ಔಟ್ಸೈಡ್ ವೆಂಡರ್ಗೆ ಹೋದ್ರೆ vendor account debit to equity share capital. Now you are coming to promoter. So what is the entry you will pass? Promoter account debit to equity share capital. ಅಷ್ಟೇ. Vendor ಬದಲಿ promoter ಬರ್ತಾರೆ. No change. Clear? So this type of issue of shares to promoter is called issue of shares for consideration other than cash, as amount paid to promoter for service rendered by them is supposed to be utilized by the company over the long period. Such expenditure should be treated as capital expenditure and debited to goodwill account. Sir, you just told me promoter account debit, sir, but they are telling goodwill account debit. I'll come there. Wait. See, I said promoter account debit to equity share capital. Why did I tell like that? Because understand the technicalities of the journal entry. The journal entry will remain the same. Even in that case, the journal entry remains the same. Hold on. Okay, yeah, sorry. In that case also, when vendor was there, it was vendor account debit to share capital. Here, promoter account debit to share capital ಮಾಡಬೇಕಿತ್ತು. Correct, sir. Then why they are doing goodwill? See, ultimately understand this, whatever you are paying to promoter, no, it is an expenditure only. It is a expenditure only. But the thing is, what they are telling to when they give such services, we'll treat such service as a gesture of goodwill, because whatever the promoter service is giving to the company, that particular service I will use it for a long period. I will use that particular service for a long period. That is why instead of transferring the entire thing to expenses, I will record it like this: goodwill account debit to equity share capital. Goodwill account debit to equity share capital. So what they are trying to tell you, listen to me very carefully. When you purchase from the vendors, what is the entry you pass? Say you purchased an assets, or suppose you purchased a service, professional service. Okay, what is the entry you pass? Sir, professional service is an expenses, so debit to Mr. ABC. Correct? Then when you allot the shares, it will be Mr. ABC account debit to share capital. Correct? This is the entry normally you pass. See, we are transferring this to expenditure. Whatever we are services we are availing from ABC, we are treating it as a professional service and we are transferring it to P&L as our revenue expenditure. But what the whole topic is, when promoters render any service to the company, when promoters renders any service to the company, it is not treated as revenue item. It is not treated as revenue item because the idea is, when promoter himself is giving service to the company, it is usually given for the whole, at least to majority part of the company's next 3 to 4 years. That means, say I am an engineer and I have set up a company with 2-3 of my friends, and now say, let's say example, 4 members have come together and set up a company, and that company is also into construction. Okay, but I am into civil construction. So what I did is, see, company directly doesn't know and acquire the clients, or doesn't know how the construction actually works. So what I did, I prepared a SOP for the company. What is SOP now, sir? SOP is standard operating procedure. What is it? Standard operating procedure. Sir, what is exactly standard operating procedure? Standard operating procedure is a instructions to the company as to how it should procure the clients, how it should deliver the services, what are the areas it should cover, all those things. It is like an instruction, right? So just before attending this classes, there was an instruction given to you. Please come at this time, please sit here, please make yourself comfortable. Once you are ready, you should not use your phone, make your phone into silent. This is called as standard operating procedures. In the same way, I as a civil engineer, I gave a standard operating procedure, I prepared it and gave it to company. Here, the service which I am rendering to the company, do you think this SOP is only used for 1 year or 1 day or 1 month, or do you think this SOP will be used for next 3 to 5 years, or it can be used permanently also? Correct or no? It can be used permanently also. Sir, minor modifications might happen in future, but this SOP which I am giving definitely will be used for 3 to 5 years. Correct? Now, don't you think this service which I am providing to the company, it is in the kind of promoter service? That is, I am a promoter but a professional, so I am giving service to the company and company is using it, right? But don't you think this service which I give to the company, it is usually used for more duration than 1 year? So whenever you use any expenditure, whenever you make any expenditure and the benefit is for more than 1 year, you usually call it as an asset, or it can be prepaid expenses, or it can be deferred revenue expenditure. E more item, correct? Either it can be called as prepaid expenses, either it can be called as deferred revenue expenditure, or either it can be called as asset. See, here there is no question of prepaid expenses, so that is eliminated. There is no question of deferred revenue expenditure, because what they are trying to tell you is, this is not a revenue item only. Why? Because you are going to use this for more than 3 to 5 years. So treat it like a capital expenditure. Because you are going to treat it like a capital expenditure, whenever there is a capital expenditure, there is an asset creation. Correct or no? Whenever you purchase an asset, it is called as capital expenditure. Because this is a see, prepaid expenses and deferred revenue expenditure are not capital expenditure. They are revenue expenditure only, but paid in advance. Understanding? Whereas if it is a capital expenditure, it will be called as asset. Some asset is created. So what they are telling, promoters, whatever the service he gave regarding SOP creation, that is a kind of capital expenditure. So we need to create an asset. So that asset is nothing but goodwill. Why? Because, sir, why goodwill only? Sir, we can create any asset. What asset you will create? Did you buy anything physical? No. Is there any physical material you bought? No. Only intangible you got. Correct? So what is the intangible best item? Goodwill. So any services rendered by promoters will be usually in the terms of intangible, and all those services should be considered as capital expenditure. And that is why, when instead of professional services debit to Mr. A by C, this will not be done. Rather than this, what they will do? They will do it like this: goodwill account debit to Mr. A. Then when they issue shares, it will be Mr. A account debit to share capital. So instead of passing two entries, 1 and 2, they passed only one entry. Here, Mr. A is getting credited, here it is getting debited. So instead of that, goodwill account debit to share capital. That is what it is. In simple terms, you remember, whenever shares are issued to promoters, goodwill account will be debited, share capital will be credited. Whenever we issue shares to the promoters for any service rendered by them. So goodwill account will be debited. In other cases, in case of vendors, vendor account would have been debited. Here, instead of debiting vendor account, we are debiting the goodwill account. Clear? Okay. Moving on. Illustration number 6. Bright Limited was registered with a share capital of how much? 10 lakhs in equity shares of 10 each. Okay. The company acquired factory building worth 1 lakh. So Bright Limited is having a share capital of 10 lakhs, and how it is split? 10 rupees per share. So that means what? 1 lakh shares, 1 lakh shares of 10 each. Yeah. The company acquired factory building worth 1 lakh and the plant and machinery worth 80,000 from Delight Limited and issued 18,000 equity shares of 10 each to the vendors as fully paid up. The directors also decided to allot 2,000 equity shares credited as fully paid to the promoters for their services. Further, capital was issued to the public for cash to the extent of 3 lakh, payable in full with application. All the shares were taken up by the public and fully paid up. Show the necessary journal entry. So they have given 2 to 3 adjustment in one question. Don't worry. Let's break it and prepare the solution in part wise. Okay. First part we have to look at is purchasing of assets from Delight Limited. That part we'll address. Okay. Yeah. Illustration number 6. Okay. What all you purchased, sir? Sir, I purchased factory. Okay. Very good. How much you purchased for? Sir, I purchased it for factory. 1 lakh rupees. I purchased it for 1 lakh rupees. So when you purchase a factory, it is an asset. When asset goes up, it will be debited. Okay. Then, sir, I purchased plant and machinery. So when you purchase plant and machinery, that asset will also go up. So it will be also debited. Don't tell purchase account. For any purchase of assets, it will be asset account. Correct? How much? 80,000, sir. Okay. Very good. To whom you have to pay? Sir, I have to pay to Delight Limited. 1,80,000. Correct? Yes, sir. 1,80,000. Next, how are you paying this? You are going to make the payment, no? How are you paying this? Sir, I am going to make the payment not by bank but by issue of equity share capital. Very good. So how many equity shares you are going to issue? Sir, 1,80,000 is the amount which I need to pay. I am going to issue them shares at 10 rupees each. So that will be 18,000 shares. In fact, they have directly given in the question, but I am just trying to help you understand the things. If they would have given premium, and then we would have calculated number of shares. Here it is issued at par and they have given in the question, we'll follow that. But whatever they are in the question and whatever this we have calculated, both are same. Clear? To equity share capital 1.8 lakhs. 1.8 lakhs. Clear? Okay. So that completes our first part. Next part. The next part. Directors of also decided to allot 2,000 equity shares as fully paid up to promoters for the services. See, understand this line. 2,000 equity shares as fully paid up. We are giving these shares for the services which we have rendered. That means we are not going to collect any money from the promoters. Rather, we are giving it for free. Not exactly free, because promoters have given the services. That is why we are giving you, instead of money, we are giving you fully paid up shares. Clear? Oh, yes. So what is the journal entry we just saw? Goodwill account debit to equity share capital. How much it is? Sir, 2,000 shares at 10 rupees each. So that will be 20,000. That will be 20,000. Okay? Yes, sir. Sir, next line, they are telling that they are issuing 3 lakh fully paid shares and there is no lump sum, there is no installment, nothing. Everything will be paid on application only. Everything will be paid on application. So there is no allotment, no application, no first call, no second call. So whatever money comes, entire money is application. And they are telling all the shares are fully taken up by the public. So what is the entry? Now, don't worry about share application money, share allotment account, first call account, second call account, not needed. Why? Because every money is coming in lump sum. So, bank account debit, how many shares worth? 3 lakh. To equity share capital 3 lakh. Done. Done. You can pass this entry. One entry is enough. No, sir, I want to pass application and allotment. Okay, if you want to pass a first call, second call, antu ilva. Okay, you can pass. Sir, I want to pass first application money. Fine, you pass. You want to pass application? Bank account debit to share application. Don't use the word application only. Use the word application and allotment. Why? Because whatever money is received is towards application as well as towards allotment. Clear? So if you want to pass 2 entries, you can pass it like this. Then share application and allotment debit 3 lakhs to equity share capital 3 lakhs. Same entry appa. Now same entry madirodu. Here what is happening? Here once it is getting debited, once it is getting credited. So instead of recording twice, what we did? Bank account debit to equity share capital. Sir, if you write this entry, will we get the marks? 100% they will give you marks. Don't worry about it. It's done. Okay. Okay, they have given balance sheet for you. The balance sheet shows 5 lakh as equity share capital. Sir, why 5 lakhs, sir? 3 lakh you have called up from the equity shareholders. 1.8 lakhs you have given it to your vendors. So 3 plus 1.8 lakh is 4.8 lakhs and 20,000 is to promoters. So total 5 lakhs. Clear? Sir, but you told it is 1 lakh equity shares. No. It was registered. It was registered with the share capital of 10 lakh. That means registered means what? My authorized capital is 10 lakhs. Look here carefully. See this. This is very important. Authorized capital is 1 lakh equity shares of 10 each. 10 lakh rupees. Under that, issued, subscribed and paid up. We use the word issued, subscribed and paid up. Sir, why we are issued and subscribed anyhow is same. But why paid up is coming, sir? Because all the shares are fully paid up. Correct or no? If anything is not paid, then we would have not called it as paid up. We would have showed issued, subscribed. Then under that we could have showed paid up, and again we could have showed unpaid. But here everything is paid. So we are showing everything in one item. 50,000 equity shares of 10 each, fully paid up 5 lakh. Of the above shares, 2,000 equity shares has been issued to vendors, promoters other than cash. They are telling that also. Clear? So this is your balance sheet. This is how it looks. Then all your non-current assets, your assets 1,80,000, your intangible assets 20,000, your cash and cash equivalents 3 lakhs. Sir, what is this intangible assets 20,000? Goodwill, correct? And what is this 3 lakhs, sir? How much money you received from the equity shareholders? 3 lakhs. Clear? Okay. So they have given you a summary also. Mark it as important. One day before the exam, you can revise. Any allotment of shares against which cash is not received. Cases, shares are issued to promoters. Here write down goodwill will be debited. Allots it to shares to vendors or creditors in lieu of cash. Shares are also issued exchange during business purchase or merger of the companies. See, this is also quite common. This is used when, say, suppose Mr. A, sorry, not Mr. A Limited purchased B Limited. Purchased B Limited. That means A Limited completely acquired B Limited. And for whatever it has acquired, no, it has to pay money. So instead of paying money, what it does is A Limited will issue the shares. To whom, sir? To B Limited. Illappa. B Limited is not owner. Who is the owner of B Limited? The owner of B Limited will be shareholders. Correct? B Limited, the owner yaru? Shareholders. So what A Limited will do is A Limited will purchase B Limited, and whoever were the shareholders of B Limited, to those shareholders, it needs to pay the money. Correct? So instead of paying the money, what it does, you take the shares of my company A Limited. So instead of being the shareholders of B Limited, you become shareholders of A Limited. That's it. So I will not pay anything in cash. Earlier also you were owner of B Limited, now you will become owner of A Limited. But listen to me. A Limited, it will not be like whatever shares you were holding in B Limited, to that extent you will become owner of A Limited. Okay, there will be some conditions. Don't worry, that is not there in your syllabus, so that they are also given here, not covered in the syllabus. Okay, so leave that headache. So here they have again given the summary. Treated as capital expenditure, debited to goodwill account. Vendor the journal entries helidare. See this one, case 3, shares are also issued exchange during business purchase or merger of the company. Leave it. I will not tell anything regarding this now, because any of questions will not come on this. Any of questions? One second, it is blur. I'll close it and open. You leave this, don't worry about it. This we will discuss at the end of chapter. Why? Because if I discuss now, it will be confusing and I don't want to confuse you. Leave this. Practical questions are given for you to solve. Please solve it. The first question is, shares are issued to the company where they have purchased some assets. See here, B Limited purchased the assets of C 10 lakh worth 10 lakh 80,000 from C Limited. So what is the entry you pass? Sundry assets account debit 10 lakh 80,000 to simulated to C Limited 10 lakh 80,000. Next, if you issue the shares at par, then it will be C Limited to equity share capital account 10 lakh 80,000. How many number of shares you will issue? 10 lakh 80,000 divided by 10 rupees each, 100 rupees each. So we will issue 10,800 shares. Now, if you issue at a premium of 20%, then what happens? If you issue at premium, this 10 lakh 80,000 will be debit only, but here it will be only 9 lakh to share capital and 1 lakh 80,000 to share premium. Why, sir? Because 10 lakh 80,000 divided by 120. 10 lakh 80,000 divided by 120. So that will be 9,000 shares. That will be 9,000 shares. So 9,000 into 100, 9 lakh will be to nominal capital, remaining will go to your share premium. Same thing. Here, same up, promoters. We have already seen. Goodwill account debit to share capital. Sometimes underwriters are also given the share. Underwriting commission account debit to underwriters account debit to share capital. Similar to vendors. Clear? Next comes our important topic, forfeiture of shares. What? Forfeiture of shares. Sir, now what is this forfeiture of shares, sir? See, forfeiture of shares means we issued the shares in installment. Application alli 3 ರೂಪಾಯಿ, allotment alli 3 ರೂಪಾಯಿ, first call alli 2 ರೂಪಾಯಿ, second call alli 2 ರೂಪಾಯಿ. So what happened is, listen to me. Issued shares of rupees 10 each. So how did we split? Sir, on application, say 5, on allotment 2, first and final call 3. First and final call 3. But what happened is, one shareholder who applied for 300 shares. How many shares? 300 shares. He got 300 shares and he paid application money of 1,500. Next, what he did is, we called for allotment. We allotted the shares. That itself is a call, correct? A separate call will not be made for this, correct? So we allotted the shares. He applied for 300 shares and we received 1,500 rupees as application money. So now on allotment, allotment happened and we announced that allotment has happened. Now he has to pay the allotment money due. So he came up, he paid the allotment money also. He paid the application, he paid the allotment. Now on this, we made a final call. So he has to pay another 900 rupees, correct? Now this 900 he didn't pay. No matter how many times I followed up and asked him to make the payment, please pay, is not paying. He's not paying at all. Now his number is also not reachable. Nothing. We are not getting any communication from his side. So now what I will do? See, we are not receiving 900 rupees at all, right? Yes. So what I will do is, I will cancel his shares. I will cancel his shares. Sir, yes, I will cancel the shares. I will say, you have not paid the money. You have to pay 900. Either pay 900, or if you don't pay 900, I will cancel all your shares. This cancellation of share is called as forfeiture. Is called as forfeiture. Clear? This cancellation of shares is called as forfeiture. Sir, why company will cancel? What will happen? What is the benefit the company will get by cancelling? What the company will do is, once they cancel the shares, they will reissue the shares again to somebody else. Once company cancels the shares, they will reissue the shares to somebody else who is ready to pay the money. Who is ready to pay the money? Clear? So forfeiture is cancellation of shares, and those shares will be usually reissued to the other members, whoever are interested. Clear? Okay. Now, listen to me carefully. As simple as it looks, it is definitely simple, but the simplicity is there if it is issued at par. If it is issued at par. See, in this question, in this issued the shares of 10 each at 10 only. Okay, so my issue price is equal to my face value or nominal value. Correct? So what happens? Forfeiture, what happens is, I cancelled his shares. Correct? Yes, sir, you cancelled his shares. So what exactly happens? The story continues. So you want to cancel his shares? You cancelled his shares? Yes, sir, I cancelled his share. So you have received this 1500 and this 600. Correct or no? So total how much you received? You have received 2100. Correct? You have received 2100. This amount will be considered as, this amount will not be refunded. Yes. Once you cancel the shares, this he had to pay 900. He didn't pay us 900, because of which we are forfeiting his shares. Forfeiting andre cancelling his shares. So how much money we have already received? Sir, we have already received 1500 and 600 rupees. Correct? So how much total we have received? 2100. Will not be refunded. It will not be refunded. Why, sir? Because it is a penalty. It is the penalty. Why penalty, sir? Because he has not paid up the shares, and he has actually not given us the money, and he gave us lot of trouble to pay that money. That is why this is a kind of punishment. We are cancelling your shares, and even if I cancel the shares, I will not refund you any money. So this will not be refunded. Rather, this will be transferred to a new account called as forfeiture account. A new account called as forfeiture account. So it will not be refunded. It will go and remain in share forfeiture account. Clear? So if shares are getting forfeited and cancelled, that means the person whose shares we are cancelling or forfeiting, they will not be paid any money. Rather, that money which they have already paid us will be transferred to forfeiture account. Sir, it is unfair, sir. I know it is unfair, but this is how it is. Clear? Okay. See, this entire case, if you observe carefully, shares were issued at par. So simple. Adjustment was simple. So if you want me to explain how the accounting entries will look like, listen to me carefully. When the application is made, what is the entry we do? Sir, bank account debit to equity share capital account. Very good. Let's take example of only these 300 shares. Huh? Let's not mix up, just to your understanding. So 1500, 1500. Correct, sir. Next, allotment happens. Correct? Yes, sir. Allotment happens. What is the entry will pass? Sir, equity share allotment account debit. How much you have to receive on allotment? 600. Correct? 600. I will reverse this also. Correct or no? I will pass on. I will transfer this also to. Sorry, 1 second. This is not equity share capital. My mistake. This is to equity share application. Now, I will have to transfer this equity share application also to share capital. So, equity share application account debit 1500 to equity share capital. To equity share capital 2100. To equity share capital 2100. Next. Bank will receive the money in bank. Yes, sir. Bank account debit 600 to only equity share allotment. This money is already received. Correct or no? Here we have already received. Only this much we have to receive. To equity share allotment account 600. Done? Okay. No problem till here. Now, first call is made. First call. What is the entry for first and final call? Correct? Huh? What is the entry? First and final call account debit. First and final call account debit to equity share capital. To equity share capital. How much? Sir, total 300 shares into 900 rupees. 3 rupees, no? If I am not wrong. 900, correct? 900. Correct? 900. Now, don't pass bank account debit. Why? Because we are not receiving the money. So, what I will do? I will transfer this first and final call account to calls in arrears. Correct or no? So, calls in arrears account debit 900 to first and final call 900. Clear? Okay. Now what happens? I kept on calling them, asking them to pay. They are not paying. Correct? They are not paying. So what I will do? I will cancel the shares. I will cancel the shares. Clear? I will cancel the shares. So when I cancel the shares, he is no more going to be our owner. Correct or no? He is no more going to be our owner. So whatever share capital I created for him, he will no more be having part in that share capital. So whatever share capital I created for him, it will be reversed. Why? Earlier he was having the share in the share capital. That is why it was kept. Now he will no more have the share. Why? Because I am cancelling his shares only. I am cancelling his share only. So when I cancel the shares, his share capital should also be cancelled. Correct or no? So equity share capital was earlier credited. Now it will be debited. So equity share capital account debit. Sir, how much to debit, sir? How much should I debit? How much you have credited till now? Sir, I have credited here 900. I have credited here 2100. So totally you have done 3000. In other words, you have actually transferred 300 into 10 rupees. Entire amount has been transferred to equity share capital. Sir, no sir, but there is some calls in arrears. Correct, appa? That calls in arrears is sitting in calls in arrears account. But here, we have already shifted it to share capital. Correct or no? When we made the first call, that time only we transferred it to equity share capital. Correct or no? So total equity share capital credit was how much? 3000. So that much will be debited. That much will be debited. Clear? Yes? Okay. Then what, sir? What will happen next? Next, what will happen is calls in arrears was having a debit balance 900. That means what? Receivable balance of 900. When I am cancelling his share, will he pay me any money? No. Because he didn't pay the money, that's why I am cancelling. Correct or no? So now I need to reverse this also because it is no more receivable. So it is showing a debit balance. Now how to reverse? Credit it to calls in arrears. How much? 900. Okay, sir. So remaining 2100. Remaining 2100 is already paid to me, and that 2100 is with me only. Correct? That 2100 is already with me. So that I will not refund. I will not refund that 2100. Then what I will do, sir? I told you, no, that 2100 will be transferred to forfeiture account. So what I will do? I will create an account called as share forfeiture account. This 2100 will be kept in share forfeiture account. Sir, till when it will be kept, sir? It will be kept in share forfeiture account till this cancelled shares are reissued to somebody else. So this 2100 will be kept in equity share forfeiture account till the cancelled shares are reissued to somebody else. Okay. Then what will happen, sir? Then what will happen is a different story. Hold on. Just hold on. First you understand basics. Then we'll come slowly. Okay. Now this is the case in case if shares are issued at premium. Sorry, issued at face value. Now, sir, what if shares are issued at issue price is 120? Not 120, sorry, 12. Issue price is 12. Now what will happen, sir? See, issue price is 12, face value is 10. Premium is 2. Correct? Okay. Now, how this 12 rupees collected is the question which we need to ask. How this is collected? Let's split it. Sir, on application, 3 rupees. Okay, let's keep it 5 only. 5 to make it 3. 5. Sir, on allotment, it is 4. It is 4. And on first and final call, it is 3 rupees. It is 3 rupees. Okay, very good. Now what happened? 300 shares paid this. Paid. So how much we received? 300 into 5. 1500. Here he paid 300 into 4. That is 1200. Now here 300 into 3 is equal to 900. Not paid. He did not pay this. He didn't pay this. Okay. This was paid. This was paid. This was not paid. So what I will do? I will forfeit the shares. I'll forfeit the shares. Forfeit means cancel. Now, how much money in total I have received? Sir, I have received 1500 plus 1200. Received. How much? 1500 plus 1200 is equal to 2700. Correct? Now, my question is, out of this 2700, let's assume like this. This allotment money has 2 rupees premium. This allotment of 4 rupees is there, no? In that 2 rupees belongs to premium. So, in this 2700, how much is towards share capital? How much is towards premium? How much is towards share premium? Simple, sir. Total shares 300 into here 5 rupees plus 4 rupees. 5 plus 4 minus 2. Why? Because 2 rupees is towards premium. So that will be 2100. Here, how much is towards premium, sir? Sir, 300 into 2 rupees. That is 600. That is 600. That is towards premium. Okay. Now what changes, sir? What are the entries that will change? First entry will remain same, sir. Whatever is there, no, here, where, here, that entry will remain same. So what is the entry? Bank account debit. Monotonous. Bank account debit. How much it is? Sir, bank account we have received on application 1500. Very good. To equity share application 1500. Allotment happens, sir? Yes, sir. Allotment happens. What is the entry on allotment? Sir, equity share allotment account debit. How much? Sir, 1200 rupees. 1200 rupees to equity share capital. To equity share capital. How much? 600 to equity share premium, not equity, we'll just use the word share premium. To share premium 600, correct or no? Sir, how, sir? This is 300 into 2. This is 300 into 2. Correct, everybody? Yes. Next, this also has to be transferred to share capital. Correct or no? What is the entry? Equity share application account debit. How much it is? 1500 to equity share capital 1500. Okay, sir. Next, what happens next? First call and final call. First and final call. What is the entry? First and final call account debit 900 to equity share capital 900. Now don't use, sir, to equity share premium, sir. Already written, no, sir, share premium. 2 rupees per share is the premium. 300 into 2, 600. It is already collected during allotment only. Correct or no? Why again premium will come? How many times premium will collect? Now whatever final call is there, it is only towards equity share capital. So always remember, premium will be usually collected on the allotment only. Usually premium will be collected on the allotment itself. But if question specifically tells you premium is not collected on the allotment, it is collected on the first call, then you have to take it in the first call. Otherwise, it is usually collected in the allotment. Okay. So first final call account debit to equity share capital. Now, did you receive the money? No. So we'll shift this to calls in arrears. Calls in arrears account debit 900 to final call account 900. Did he pay the money? No, sir, he didn't pay the money. Okay, very good. So what he will do? Sir, I will forfeit the shares. Okay. How do you forfeit, sir? Simple, sir. I will cancel his shares. So when you cancel his shares, whatever share capital was credited, now you have to reverse it. Yes, sir. So share, equity share, capital account debit. So how much was credited till date? 900 plus 1500 plus 600. 3000 rupees was credited. Correct or no? In simple words, 300 into 10 rupees. 2 calls in arrears. Correct or no? Calls in arrears also has to be received. Earlier we debited it. Now it is no more receivable. So we'll reverse it to 900. So remaining, sir, remaining to 4 feature account 2100. Okay. Now, what was the entry here? 3900, 2100. What is the entry here? Sir, 3900, 2100. What changed? Nothing changed. But question was different, no? Here the issue price was 10. Here the issue price was 12. Still, why nothing changed, sir? Why nothing changed is whatever share premium you have collected, it will not be transferred to forfeiture account. It will never be transferred to forfeiture account. Whatever is collected in the share premium, it will always remain in the share premium. It should never be moved out of share premium. So if you have collected any premium which is over and above the issue, face value, if you have collected any money over and above the face value, that is called as premium, and that premium will never be taken out. It will be always kept in the premium only. When it is kept in the premium only? When it is already paid. See, when security premium is already paid, it will be kept in security premium account only. When security premium is already paid on the forfeited shares, which shares we are cancelling? Sir, we are cancelling these 300 shares. Now answer this question. Out of these 300 shares, have you issued premium for premium? Yes, sir. Is the premium paid? Yes, sir, premium is paid. So on cancelling these shares, whatever you have transferred to premium earlier, it will not be taken out. It will be kept there only. No change. Sir, then when we should transfer, sir? If premium is not paid, if premium was not paid, then there is a change in this entry. That time that will come. That time it will come. That time we will have to debit it. Clear? Everybody? Yes. Am I understand? Am I clear? Yes. Okay. So premium account, once it is paid and it goes inside premium account, it will never be taken out. So whatever should be taken out is only share capital. Only nominal value has to be taken out. However, if premium amount was created but it is not yet paid, then it will be taken out. Then it will be taken out. So in this case, it is premium is paid. When premium is paid, don't touch the premium, leave it as it is. Whatever has been transferred to share capital, only that will be transferred to forfeiture account. Clear? Forfeiture account. Sir, give me example where premium is not paid. Fine. Let's do that also. Suppose, let's take in this example like this. Same example, issue price is equal to issue price is equal to 12. Face value is equal to 10. On application, say you receive 5. On allotment, you receive 4. First call, you receive 3. Okay. So premium is 2 rupees. Okay. So let's say premium is paid here. Premium paid on first call. On first call. Premium paid on first call. So what happens here? Sir, nothing happens, sir. Everything remains same. All this calculation, everything will remain same. Okay. This will also remain same. The first entry will remain same. So the first entry was what? Bank account debit 1500 to equity share capital, sorry, not equity share capital, to equity share application. To equity share application 1500. Next, what will happen? Sir, allotment happens. Okay, very good. Allotment happened. What is the entry? Equity share allotment account debit. How much you need to collect? Sir, 4 rupees per share. So 1200. Are you collecting the premium? No, sir, we are not collecting the premium. So entire amount will go to equity share capital 1200. Okay. Next. Sir, even this has to be moved to equity share capital. Okay, fine, move it. So equity share application account debit 1500 to equity share capital 1500. Clear? Okay, 1500. Okay, done, sir. No problem. Next, this money has to be received in bank. So bank account debit 1200 to equity share allotment account 1200. Okay, any changes? No changes. Everything remains the same. Only thing which we have not opened is share premium. Why share premium is not opened? Because it is not yet paid. Okay, next, third, final call. What is the entry? Final call account debit to equity share capital to equity, not equity, to security premium. To security premium. Here the equity share premium is due. Correct or no? How much is the final call? 3 rupees. So it is 900. Here it is only 300. Here it is 600. Now payment has not been made. Okay, sir. Payment has not been made. Payment not made. So we have to transfer this to calls in arrears. Yes, sir. So calls in arrears account debit 900 to final call account 900. Okay. A payment didn't happen, sir. So we are forfeiting the share, sir. Forfeiture of shares. Okay. Very good. First, debit share capital. How much? 3000. Why 3000, sir? 300 shares into 10 each. Okay? Yes, sir. Next, ask the question. Is the security premium paid? No, sir. Premium has not been paid. See here. Where was the premium due? Premium was due here. Did he make the payment? No, he didn't make the payment. Now, because premium is not yet paid, we will reverse it. So, security premium account debit. How much? 600. Two. First is reverse calls in arrears. How much was calls in arrears balance? 900. Balance will go to share for feature account. How much is that? 2100. 2000. No, wait. Hold on. Sorry. 1 second. 2500, if I am not wrong. 2700. Sorry. 2700. Yeah. Sir, how did you get this 2700? See, understand here. How much he has already paid? Sir, he has paid 5 rupees. He has paid 4 rupees. So, total, it has gone towards nominal value. So, total he has paid 900. On how many shares? 300 shares. So, that is 2700. See, share forfeiture account alli, see, the money which goes to share forfeiture account is nothing but the money which we have already received. Share forfeiture account will always be credited with the money actually received by the company. So how much is received? 5 plus 4 is received into 300. So total 2700. So whatever is received, that will be cancelled. I mean, that will be kept with us, correct or no? So that much amount will go to share forfeiture account. Now, look here. How much was forfeiture account? 2100. How much is forfeiture account? 2700. Why there is a difference, sir? Because earlier the premium was adjusted against allotment, but here we are adjusting the premium against the final cost. So that is why the difference is coming. But the interesting part is here we are debiting the security premium. Here there was no debit in the security premium. Why there was no debit in the security premium? Because it was paid. That is why we didn't cancel the security premium. Here the security premium was not paid. That is why we are cancelling it. So once security premium is paid and the amount is transferred to security premium account, don't take it back. Leave it there only. Sir, what if security premium is not paid but it has been transferred to security premium? Now take it back. Now take it back. In other words, if you want one more explanation, one beautiful explanation, how journal entries are. See, if I would have not written this security premium, suppose, how much should I have debited? 3000. How much should be credit of careers in arrears, calls in arrears? 900, because that much was the amount balance receivable. Correct? How much amount has already been collected? 2700. Can you balance it? Here it will be 3600. Here it would have been 3000. Where is that extra 600? That extra 600 is because of here. Here 600 is towards premium which was never collected. So if it is never collected, should we not cancel it? That is why we are debiting it here. That is why we are debiting it here. Clear? Everybody is understanding? Yes? Please write it down. I mean, take a screenshot. I know writing will take a lot of time. I'm sure about it. Please take a quick screenshot. Okay, done. I'll just move this here so that the two also will come in comparison. Take the second screenshot. Take this final screenshot of this two. Okay, done. Next, take this one. Take the screenshot. Yes. Okay, done. Yes. Everybody. Okay. Okay, now coming back to the next part. Now, what will happen with these forfeited shares? I already told you it will be reissued. Correct? The shares will be reissued. Now, so suppose, let's say, this example only will take. Okay. Forfeited shares are reissued. Okay. How many shares were forfeited? 300 shares. 300 shares were forfeited. Now, this 300 shares can be reissued again. Correct? So, reissued at par, reissued at premium, reissued at discount. Sir, what do you mean by this, sir? You told me you can't issue the shares at discount, correct? But here the reissue is happening at discount. That means it is not the original issue which happened at a discount. It is reissue which is happening at a discount. Clear? Okay. Now, if you reissue the shares at par, that means what, sir? Sir, issue price is 10, face value is also 10. Issue price is 10, face value is also 10. So that means what? 300 shares, we are going to collect 3000 rupees. Done. Excellent. Okay. Now come back. Here, how much was the balance with you? 2100. In where, sir? In forfeiture account. Correct. That means you had already collected 2100 from this 300 shares only. See, from 300 shares, we have already collected 2100. Correct? Matte you are collecting 3000. Correct? See, so that means with 300 shares, you collected total how much? For 300 shares, how much did you collect? 3000 rupees now, 2100 earlier. So total 5100 you collected. Correct? But what is the value of those? The value is only 3000. So whatever you earlier got, whatever refund was there earlier, don't you think it is kind of a profit to me? Whatever we got earlier, 2100, which we didn't refund, don't you think is that a profit for us? Sir, why it is a profit? Sir, what is the value of shares? 3,000. How much did you collect ultimately? Sir, I collected 3,000 plus 2,100, total 5,100 I collected. How much is it actually worth? 3,000. So what is the excess? 2,100. Don't you think this is a profit? Extra. Value of the shares is only 3,000. But how much did you collect in total showing these 300 shares? You showed to person A, he paid 2,100. You took back the shares. You showed to person B, he paid 3,000. So total 3,000 plus 2,100 collected. What is the value of shares? Only 3,000. So have you collected extra? Yes. Which was that extra? Sir, earlier we forfeited. No, that is our extra. So that earlier forfeited amount is there. No, that is your profit. But not your regular profit. It is a capital profit. It is a capital profit. It is a capital profit. Clear? Understanding everybody? Any doubts in this? Any doubts in this part? No? Now this capital profit, what to do, sir? This capital profit will be transferred to capital reserve. What do you mean by that, sir? Capital reserve ಅಂದ್ರೆ ಏನು, sir? See, whatever the balance was remaining in our forfeiture account, no? Whatever this balance was remaining in our forfeiture account, no? That account will, the amount remaining in forfeiture account will be transferred to our capital reserve. So what happens is, we'll pass an entry to record this capital profit. So what is the entry? Share forfeiture account debit 2,100 to capital reserve 2,100. See, earlier our forfeiture account was having a credit balance. Now we debit it and make it zero. Where will the amount go, sir? The amount will go to capital reserve. Why it is in the going to capital reserve, sir? It is a kind of capital profit to the company. Kind of capital profit to the company. Clear? Yes? Okay. Now, sir, face value is 10, issue price is 12. Super. How much? 300 into, wait, I'll wind up the class. Hold on, I'll just discuss this topic, then we'll wind up. 300 into 12. So total 3,600. In this, 3,000 towards share capital, 600 towards share premium. Okay. Okay, fine. No issues. Now here also, if you observe carefully, don't take this. This is going to share premium. You leave it. What is the total shares cancelled? 300 shares cancelled. Yes, sir. 300 shares cancelled. Now, 300 shares cancelled, yes, sir. How much money collected? Same, sir. Here 3,000 plus there 2,100. Don't tell 3,600. Why? Because 600 is towards security premium. Don't take that. You should not touch that. You should only touch this. Okay. So this 3,000 plus this 2,100. Correct? So total 5,100 minus how much is actually collectible? 3,000. So what is remaining? 2,100. So this 2,100 is also our capital profit. Correct? Just like this example. Right? So entry, same entry. What is the entry? Share forfeiture account debit 2,100 to capital reserve 2,100. No change. So if you observe carefully, if you reissued the shares at par or reissued the shares at premium, whatever balance is there in forfeiture account, that will go to your capital reserve. Sir, then why did you explain all these things? That is for your understanding why it is going to capital reserve. It is going to capital reserve because it is a kind of capital profit. Are you going to every day sell the give the shares, cancel the shares, give the shares, cancel the shares? It happens once in a blue moon, correct? So that is why it is not a revenue profit, it is a capital profit, and capital profit will be shown in capital reserve. Clear? Yes. So what is the amount that will go to capital reserve? It is usually the balance remaining in forfeiture account. Clear? Okay. Then next, sir. Next. Wait. Next. Here, what is happening is face value of the shares is 10, but I am issuing it at three scenarios. Let's take three scenarios here. Let's take three scenarios. First scenario, we'll better put it like this. First scenario, I am issuing it at 9 rupees. I am issuing it at 6 rupees. I am issuing it at 1 rupee. I am issuing it at 1 rupee. Clear? I am issuing it at 1 rupee. Now, if you are issuing it at 9 rupee, what is the discount? Discount is 1. Here discount is 4. Here discount is 9 rupees. Here discount is 9 rupees. Now, in this case, what is the total amount collected? Sir, 300 into 9. How much? 2700 collected. Correct? Huh? Yes, sir. What is the total collected on these shares? Sir, 2700 collected plus earlier because of cancellation, forfeited amount is 2100. So total 4800. Okay. What is the worth of these shares? Sir, the worth of these shares is only 3000. So what is remaining? 1800. This amount should be transferred to capital reserve. This amount should be transferred to capital reserve. That is the profit you are making. That is the profit you are actually making. Sir, in munche bere kesali bere tara bantala sir, ಈಗ ಯಾಕೆ ಹಿಂಗ್ ಬಂತು? Earlier there was 2100, sir. Why it became 1800? Understand very carefully. This discount is there, no? This discount 1 rupee is there, no? This discount 1 rupee discount of rupee 1 will be adjusted against forfeiture account. So what is the total discount we gave? The total discount we gave here is 300 shares into 1 rupee is equal to 300 is equal to 300. So what is the balance we are having in forfeiture account? What was the forfeiture account balance with us? Sir, forfeiture account was having a balance of 2100 and this discount has to be adjusted here. Discount on reissue of shares. How much? 300. So remaining 1800. So this 1800 will be transferred to capital reserve. This 300 will be adjusted. The discount will be adjusted against forfeiture account. So how do you record the entry, sir? How do you record the entry? Simple. When we receive the money, how much we receive? Bank account debit 2700. Correct? This is the amount we receive. Yes, sir. 2. Equity share capital. How much should be debit equity share capital? Always remember, I told you, this is the nth time I am telling you, equity share capital will always be credited with the nominal value of the share. What is the nominal value? Sir, 300 shares into 10 each. So 3000. So 3000. Sir, what about the balance 300 rupees, sir? The balance 300 will be taken from share forfeiture account debit 300. Now, earlier, what was the credit balance of share forfeiture account? What was the credit balance of share forfeiture account? 2100. Now, how much did we debit? We debited it with 300, correct? We debited it with 300. So, what is the remaining balance? 1800. That will be transferred to your capital reserve. So, share forfeiture account debit 1800 to capital reserve 1800. Clear? Is everybody is understanding? See, earlier cases, in case of shares reissued at par or reissued premium, whatever was the balance in forfeiture, entire balance was getting transferred to forfeiture account. But here it is not like that. Any discount given will be adjusted against your forfeiture, and whatever balance remains in the forfeiture, that will be transferred to capital reserve. Okay. In this case, can we calculate just calculation of numbers? Issued at 6, here issued at 1. So here, what is the discount? What will be the discount? Discount will be 4 rupees. Discount will be 4 rupees. Now this discount will be adjusted against forfeiture account. Forfeiture account. So in other words, what is the forfeiture balance? 2100. What is the discount? Sir, 300 into 4. So that will be 1200. So what is the remaining balance? 2100 minus 1200 is 800, 900. This will be transferred to capital reserve. So ಇಲ್ಲಿ entry ಅಲ್ಲಿ ಏನಾಗುತ್ತೆ? So what changes will happen in this entry? Here the changes will be bank account will remain as 6 into bank account will be 300 shares into 6 rupees each, 1800. Here share forfeiture account ಅಲ್ಲಿ adjust ಎಷ್ಟು ಮಾಡ್ತಿದ್ರಪ್ಪ? 1200. That is the amount of discount. 1200 to share capital 3000. And what happens here? What happens here is only 900 900. And 900. Clear? Yes? Okay. Sir, what happens in this case? What happens in this case? So what is the discount? The discount is 9 rupees. The discount is 9 rupees. Okay? Okay. Now, understand. So this discount should be adjusted against forfeiture. Okay, sir. Correct. So what is the discount? 300 into 9. Total 2700. What is the forfeiture account balance? 2100. Don't you think our discount is more than the forfeiture account? Our discount is greater than forfeiture account. Correct? Yes. So in this cases you cannot give discount. That means you cannot give discount more than your forfeiture balance. More than your forfeiture balance. This is not allowed. Cannot give discount more than the forfeiture balance. In other words, sir, how to find out this very quickly, sir? How to find out this very quickly? Simple, sir. How much money collected on forfeited shares? How much money was collected on forfeited shares? Sir, 5 rupees plus 5 rupees plus 2 rupees. 5 rupees plus. Correct, no? 5 plus 2. 7 rupees was collected, sir. So you can issue discount at max. Discount can be issued at max 7 rupees. So you cannot issue discount more than 7 rupees. So here the discount was less than 7. Here also the discount was less than 7. Here my discount went more than 7. So that is not allowed. Sir, where did you get this 5 plus 2? Simple appa. E5, E2. We collected 5 rupees on application, 2 rupees on allotment, correct? So you cannot go discount less than, more than this. Clear? Yes. So if you want me to continue and give one more example, sir, what happens if I issue at 7? Sorry, 3, not 7. If I issue it at 3, okay, fine. What is the discount? The discount is 7. So what is the total discount? So total discount is 300 into 7, 2100 discount. Correct? Huh? Forfeiture balance 2100. So what remains? Nothing. You can give the discount. Now what is the entry? How will you pass the entry, sir? How will I pass the entry? See here. Bank account debit 900 to share capital 3000. So the entire amount comes from share forfeiture account 2100. Because share forfeiture account gets closed. Why? Earlier we debited it with 2100. Sorry, credited with 2100. Now we are debiting it with 2100. Nothing remains to be transferred to capital reserve. So no entry for capital reserve. No entry for capital reserve. Clear? Yes. Okay. So I have explained the reissue concept also. Quickly take the screenshot. No, let's not take a screenshot now. Next class, I'll properly arrange it. Then we can take the screenshot. Now you leave it. But you understood the concept, hopefully. Yes. So whenever you reissue the shares, forfeited shares at a par, whatever balance is remaining in forfeiture account will get transferred to premium account. Same thing happens with premium. If you are reissuing the shares at a premium, whatever balance is there, that will get transferred to capital reserve, from forfeiture to capital reserve. Clear? But if you are reissuing at discount, whatever discount is there, no, that will be adjusted against forfeiture account, and after adjusting against forfeiture account, whatever balance is there, that will be transferred to capital reserve. But you cannot give discount more than the forfeited amount. That means whatever you have collected earlier before you cancel the shares, to that extent you can give the discount. Clear? Yes. Okay. Okay, guys, that's it for today. We'll continue this tomorrow. Thank you. Bye bye. Take care.